Hi, I'm Sam Slater from Fund Calibre, and today I've been joined by Rhys Davies, co-manager of the Invesco Monthly Income Plus fund. Hi, Rhys.
Hi there.
So this fund invests mainly in corporate bonds, but I've noticed that you've got quite a bit in higher risk bonds like high yield, but in emerging markets, and some banks as well. Can you tell us a little bit more about that, please?
Yeah. So Monthly Income Plus is it's an income-focused fund, and the areas that you mentioned offer some of the most attractive income that you can find in the bond market. So the fund will naturally find itself investing in those areas, which is broadly what it always has done. So that doesn't represent a shift in any way. If you consider that the fund currently pays around 5%, so investing in high-yield bonds, bank capital bonds, and a relatively small amount, just under 9% in emerging market bonds, makes sense if we want to achieve that relatively high yield. And actually, we have a lot of experience and expertise within the team in navigating the high yielding parts of the bond market. Our approach when we do that is very much to find individual bonds that we feel offer good value. So for a high yield bond issued by a company, say Ford, for example, we will make sure that we understand the credit risks of being a lender to Ford. And then we will take a view as to whether the yield that Ford's bonds offer is enough for taking those risks. And the portfolio is then built on doing that over and over again for lots of different companies, but each time understanding the risks of the individual companies that we're investing in. Likewise for bank capital bonds, which are bonds that are issued by banks to provide them with regulatory capital. And then for emerging market bonds, we have resources within the team dedicated to understanding that part of the market and those slightly different types of risks. And I guess finally, I would add that a very important way in which we manage risk within the fund is through good diversification. So Monthly Income Plus typically, and right now, owns bonds from almost 200 different companies. And if any of those companies does default on its bonds, we can minimize the impact on the fund overall by having that diversification. So our approach for this fund is to seek out income and then manage those risks through good credit analysis and diversification.
And have your allocations changed at all since the beginning of the year, or perhaps the market lows in March?
Yes. I mean, as you would expect, this year has seen a lot of change, a lot of volatility in markets, and the fund will naturally evolve with that. So Monthly Income Plus came into 2020 relatively cautiously positioned and reflecting our view that there was generally less value in the market at the end of last year. 2019 was a very strong year for risk markets. It was great for performance, but it did mean that the year finished with generally low bond yields on offer. So as a result of that, the fund began this year with plenty of liquidity, almost 20% invested in cash, US treasuries and bonds with less than 1 year maturity, and a generally more defensive stance within the two core areas of risk, being high-yield bonds and bank capital bonds. When the crisis started to unfold in March, it meant that the fund was able to invest with a good degree of confidence in some really very attractive opportunities. And what I think is important to stress is that we were able to build some yield back into the fund during that period. So to add some income and some income streams that will be valuable in the years ahead. And during that period in March, as I'm sure listeners will be aware, we witnessed some really extreme moves in bond prices, and in particular in bank capital bonds. And some of those fell 20, 30, or even 50 points in price. And our view today is that while the 2008 crisis was centered on the banking system, this time the problem lies with the broader economy, and actually the banking system will form part of the solution. So the fund's exposure to bank capital bonds, which had been reduced in 2019, was taken up again during that sell-off. But it wasn't just bank capital bonds that the fund was buying. We were able to pick up some very attractively priced high-yield bonds and even some investment-grade bonds. And then after central banks stepped in and markets began to calm down a little, we saw some great opportunities to buy investment grade rated bonds as they were being issued. And the key point there is they were being issued with very attractive coupons because these were the first companies to issue bonds after the sell-off. And a great example that we bought for the portfolio would be Dell issuing a 10-year dollar bond with a 6.2% coupon. Since then, I would say activity within the fund and across our portfolios has slowed as markets have recovered very quickly and the number of opportunities has started to shrink. And with that recovery, the fund has also sold some bonds that have moved significantly higher in price. And so liquidity in the fund has edged back up again from a low of around 10% in June as we were deploying capital, deploying cash, to about 14% today. So hopefully you can see the way the fund is managed is very dynamic, as you would expect. And the experiences of 2020, if anything, hopefully outline how we navigate the fund through changing markets.
And looking a little bit more at the high yield aspect, which is obviously riskier, some other bond fund managers have been a little reticent to go into that space at the moment because of the global recession, etc. Because of the way you manage the fund, do you think that's probably where you'll get the better opportunities sort of in the coming months because you do this diligence and you have this diversification?
Yes, I mean, it comes down to it really comes down to the individual mandate of a fund, and as I say, this is an income fund. It sits within the strategic bond sector of funds, and within that, there's a wide range of fund mandates. Some invest predominantly in government bonds and investment grade bonds. Others, such as Invesco's Tactical Bond Fund, are downside aware funds where we can choose to de-risk and forego income if we so wish. But as I say, Monthly Income Plus is an income fund, and the focus is on achieving a high income for our investors. And so high yield bonds will be an important part of the portfolio, as will bank capital bonds and to a lesser extent emerging market bonds. And our approach to investing, as I've outlined with credit analysis, diversification, is how we feel comfortable investing in those parts of the market.
And income investors will obviously be interested in the higher yield of this fund with dividend cuts amongst lots of equities, etc. Do you think that the higher yield on the fund you'll be able to maintain it?
Yes, so it's currently distributing 5%, around 5%, and that's the challenge we're all facing. As I mentioned earlier, this year has given us a great opportunity to add some income streams to the fund that will be valuable in the years ahead. But the strength of the recovery since March has meant that yields have fallen rapidly, again, in the markets we invest in. And if yields fall further, then it becomes harder to generate that level of yield in the fund. But this year serves really as a reminder that we can get reversals, rarely as extreme as that, but reversals that can create widespread opportunities to add some yield to a portfolio. And the fund is, as I say, it's well positioned today with about 14% liquidity. That leaves us well positioned to be able to invest into any future weakness. And I would also add that even when markets are generally less attractive, as they were at the start of the year, there will always be bonds that we consider are attractively priced that we can add to the fund. And we will continue to seek those out for the Monthly Income Plus Fund, as we have done for the past 21 years of existence.
That's great. Thank you very much.
Thank you.
And if you'd like to find out more about the Invesco Monthly Income Plus Fund, please go to fundcalibre.com.